If you're new to trading stocks, it's essential to familiarize yourself with common stock market terminology. Here's a quick recap of some key terms you should know. Term 1 is arbitrage, buying an asset in one market and selling it in another where the selling price is higher, resulting in a profit. Term 2 is ask, the selling price a trader offers for their shares. Term 3 is asset allocation, an investment strategy aiming to balance risk and reward by dividing investments, stocks, bonds, real estate, cash, etc., across different assets in a portfolio. Term 4 is asset classes, categories of assets such as stocks, bonds, real estate, or cash. Term 5 is averaging down, buying additional shares of an asset or stock after its price has fallen, resulting in a lower average purchase price. Term 6 is bear market, a market condition where prices are expected to fall, usually involving a decrease of 20% or more in major indexes or stocks from previous highs. Term 7 is beta, a measure of an asset's risk compared to the market. A higher beta indicates a riskier investment. Term 8 is bid, the price a trader is willing to pay for shares of a stock or other asset. Term 9 is bid-ask spread, the difference between what buyers are willing to pay and the price sellers are asking for a stock. Term 10 is blockchain, a record-keeping database where transactions in cryptocurrencies like Bitcoin are recorded across multiple computers and distributed across the entire network. Term 11 is blue-chip stocks, common stocks of well-known companies known for their quality and history of growth. Term 12 is bond, a type of security loaned by an investor to a borrower like a company or government to fund its operations. Term 13 is bull market. A bull market is a market condition where prices are expected to rise. It's associated with optimism and investor confidence. An illustration of a bull often symbolizes this trend. Term 14 is buyback. A buyback occurs when a company repurchases its own outstanding shares, aiming to reduce the number of shares on the market. This can enhance the value of remaining shares and return profits to investors. Term 15 is capitalization or market cap. Capitalization or market cap is the total market value of a company's outstanding shares. It's calculated by multiplying the total number of shares by the current share price. Term 16 is capital gains. Capital gains refer to the profit earned after selling an asset or investment for a higher price than the purchase price. Term 17 is common stock. Common stock represents ownership in a company. Holders of common stock have voting rights on matters like corporate policies and the election of directors. Term 18 is current ratio. The current ratio assesses a company's ability to pay short-term debts. It's calculated by dividing current assets by current liabilities. Term 19 is day trading. Day trading involves buying and selling shares within a single day, taking advantage of short-term price fluctuations. Term 20 is debt-to-equity ratio. The debt-to-equity ratio reflects a company's debt relative to its equity, determined by dividing total liabilities by total shareholder equity. Term 21 is diversification. Diversification is an investment strategy that involves spreading investment funds across various assets to minimize overall risk. Term 22 is dividend. A dividend is a portion of a company's earnings paid out to its shareholders. It's a way for investors to receive a share of the profits. Term 23 is dividend yield. Dividend yield is the dividend expressed as a percentage of its stock price. It helps investors assess the income potential of a stock. Term 24 is dollar cost averaging. Dollar cost averaging is an investment strategy where a fixed amount is regularly invested, regardless of the asset's current price. Term 25 is Dow Jones Industrial Average. Dow Jones Industrial Average is a stock market index comprising the 30 most traded blue-chip stocks on the New York Stock Exchange. It measures the performance of major U.S. companies. Term 26 is Earnings per Share. Earnings per share is a company's profit divided by its number of outstanding shares. It is used to measure corporate profitability. Term 27 is Economic Bubble. An economic bubble occurs when asset prices significantly exceed their fundamental value, often leading to a sudden burst in value. Term 28 is Equal Weight Rating. An equal weight rating is a measure used by equity analysts to indicate how well a stock is performing relative to other stocks. It suggests that the stock will perform similarly to the average of all stocks used for comparison. Term 29 is Equity Income. Equity income refers to any income received from stock dividends. Term 30 is Exchange. An exchange or stock exchange is a marketplace where investors and traders buy and sell stocks. Examples include the New York Stock Exchange and NASDAQ. Term 31 is Exchange-Traded Funds. Exchange-traded funds are collections of stocks or bonds combined in a single fund that can be bought and traded on major stock exchanges. They operate similarly to mutual funds, pooling money from multiple investors. Term 32 is Expense Ratio. An expense ratio measures the cost of owning a mutual fund, including management fees, overhead costs, and other associated expenses. It is expressed as a percentage of your total investment. Term 33 is Futures. Futures are contracts requiring a buyer to purchase a specific asset and a seller to sell that asset at a predetermined future date at an agreed-upon price. Investors use futures for hedging and risk management. Term 34 is Going Long. Going long involves buying stock shares with the expectation that the asset's price will rise, resulting in a profit. Term 35 is Going Short. Going short is the act of selling stock shares with the expectation that the asset's price will fall. Investors borrow the asset, sell it, and aim to purchase it later at a lower price for profit. Term 36 is Growth and Income Funds. These mutual funds or exchange-traded funds aim for both long-term growth and short-term income, combining a history of capital gains and dividends. Term 37 is Growth Stocks. Growth stocks belong to companies whose revenues are expected to grow at a significantly higher rate than the industry average. Term 38 is Head and Shoulders Pattern. A technical analysis chart pattern where a stock price forms three peaks, indicating an impending bear market. Term 39 is Index Funds. Index funds track the performance of a specific benchmark or stock market index, such as the S&P 500, offering a more diversified portfolio. Term 40 is Inflation. Inflation is the rate of increase in prices for goods and services in the economy. Term 41 is Initial Public Offering. An initial public offering occurs when a private company becomes public by selling stock shares on the stock market. Term 42 is Limit Order. A limit order is an instruction to buy or sell a stock at or below a specific price, giving traders control over their purchase price. Term 43 is Liquidity. Liquidity measures how quickly and easily a stock can be bought or sold without impacting its price. Cash is highly liquid, while assets like a car may have lower liquidity. Term 44 is Margin. Buying on margin involves investors borrowing money from a broker to purchase stocks, similar to a loan. Term 45 is Market Index. A market index tracks the performance of a specific collection of stocks, often representing a particular industry, providing a tool for investors to assess the stock market's health. Term 46 is market volatility. Market volatility measures how much and how frequently the value of the stock market fluctuates. Term 47 is moving average. A moving average is the average price of stocks or assets over a specific period, commonly used in technical analysis to identify price trend directions. Term 48 is mutual funds. Mutual funds pool investments from shareholders to collectively purchase securities such as stocks, bonds, and other assets. Term 49 is NASDAQ. NASDAQ is an electronic exchange where investors buy and sell stocks through an automated network. It's the second largest stock exchange globally and also refers to the NASDAQ Composite Index, representing over 3,300 companies. Term 50 is non-fungible token or NFT. An NFT is a blockchain-based financial security representing a unique digital asset that cannot be replicated or replaced. Term 51 is order imbalance. An order imbalance occurs when there's an excess of buy or sell orders for a specific stock, leading to potentially volatile price changes. Term 52 is over-the-counter stocks. Over-the-counter stocks are securities traded on a broker-dealer network instead of a major U.S. stock exchange, often used by smaller companies that don't meet exchange listing requirements. Term 53 is outstanding shares. Outstanding shares refer to the total number of a company's shares issued to shareholders, including restricted shares. Term 54 is price-to-earnings ratio. The price-to-earnings ratio values a company by comparing its share price to its earnings per share. It's used to assess a company's financial health. Term 55 is preferred stock. Preferred stock is a type of stock that combines characteristics of both common stock and bonds. Owners of preferred stock receive different rights than common stockholders, such as receiving dividends before common stockholders. However, they usually don't come with corporate voting rights. Term 56 is price quote. A price quote is the quoted price of a stock or other security on an exchange. Price quotes often include supplemental information to help traders make informed investment decisions. Term 57 is profit margin. Profit margin is a measure of a company's profitability expressed as a percentage. It is calculated by dividing the company's net profit by total revenue. Term 58 is recession. A recession is a period of economic decline throughout the economy, typically lasting for at least several months. Term 59 is risk tolerance. Risk tolerance is a measure of the level of risk an investor is willing to accept on their investments. It influences the balance between potential returns and the tolerance for risk during market fluctuations. Term 60 is Roth IRA. A Roth IRA is an individual retirement account that allows after-tax contributions, enabling tax-free growth and withdrawals. Term 61 is sector. The stock market is categorized into 11 different sectors, each representing a group of companies with similar business products, services, or characteristics. Term 62 is shares. Shares are units of ownership in a company's total stock. Investors purchase shares to own a portion of the company. Term 63 is stock market holidays. While not a term, it's crucial to know the days when the U.S. stock market is closed. In 2023, observed holidays include New Year's Day, Martin Luther King Jr. Day, President's Day, Good Friday, Memorial Day, Juneteenth National Independence Day, Labor Day, Thanksgiving, and Christmas. Term 64 is stock option. A stock option is a contract giving an investor the right to buy or sell a specific number of stock shares at a predetermined price within a specified time period. Term 65 is stock portfolio. A stock portfolio is an individual's collection of investments, including stocks, bonds, mutual funds, and other financial assets. Term 66 is stock split. A stock split occurs when a corporation increases its outstanding shares by distributing more shares to current stockholders, making the stock more affordable. Term 67 is time horizon. Time horizon refers to the period an investor expects to hold an investment. Longer time horizons generally correlate with higher risk potential, while shorter time horizons are associated with more conservative portfolios. Term 68 is value stocks. Value stocks are shares of companies that are considered to be selling at bargain prices. Investors expect the value of these stocks to rise because the company's financial fundamentals suggest that the shares are worth more than their current market value. Term 69 is volume. Volume is a measure of how much a particular stock or investment has been traded over a specific period. It is a crucial factor in analyzing stock market trends and is often used to determine market strength. Term 70 is volume-weighted average price. Volume-weighted average price is a measure of the average trading price of a stock or other asset, adjusted for volume. It is calculated by dividing the total dollar value of trading in that asset by the volume of trades. Term 71 is yield. Yield refers to the income earned on an investment over a set period, expressed as a percentage of the original investment. Term 72 is 52-week range. The 52-week range is a technical indicator that measures the lowest and highest prices of a stock traded during a 52-week period. Traders use this measure to analyze current stock prices and predict future movements. Navigating the stock market and understanding stock trade terms can indeed be a learning process, but your commitment to understanding these terms is a valuable step in your investing journey. As you encounter unfamiliar terms in your research, feel free to refer back to this video until you've mastered them. The more time and effort you invest in learning stock market terms and fundamentals, the more confident you'll become as an investor. Best of luck on your investing journey.